Alrighty, traders, good afternoon, good morning, good evening, and welcome to the live show here. And here we are, waiting for the central bank here in Canada to go ahead and disclose what their decision is based on rates. We've already seen they're going to be looking, well, at least the projection is that we're looking at a 50 basis point cut. How's that going to affect your trades? Traders, we're going to go ahead and take a look at that. We just had CPI numbers come out here in the US, came out at 2.7% as expected. We saw some volatility in the market. We got some key levels in the market that we're going to go ahead and pay attention to, specifically on the US dollar CAD. I know some of you are looking at that. We're looking at the US dollar, the Euro US dollar, and then, of course, we're looking at the CAD Swiss as well. We're also looking at the Aussie CAD, the New Zealand CAD. So a lot of stuff to go ahead and cover. Let's go ahead and dive right into it, traders. I'll see you right back after this. All right, traders. Well, we got to go ahead and kick off with, of course, a disclaimer. Remember, traders, that everything we talk about here in these live sessions is for educational purposes only, and nothing is going to be advice that I'm be passing over to you, but really just talking about what I'll be looking at and how I'll be looking to trade the markets. Now, let's go ahead and start off firstly, number one, with the first thing that we have to definitely address. And that is, of course, what's going on with the dollar itself. What is going on? There's a lot of chatter about the dollar, and a lot of traders saying, "Well, big dog, the dollar's just going to continue to rally because of Trump and because of Trump's policies." Well, traders, let me go ahead and let you know. If Trump's policies is American first, all right. If Trump's policy is American first, and it looks like is it my screen? Do I have is my screen paused at the moment right now? Let me double check here. Looks like it's moving. Hold on a second. You might be able to hear me, but my screen seems to be paused. Hold on. Yep, looks like it is frozen right now. All right. So with it being frozen, let's see if I can go ahead, and I'm not sure why it's done. Go ahead and throw in the chat there. I want to go ahead and make sure. Does it look like, yep, image is frozen? All right. Okay, good. Is still audio is still good. All right. Well, let me go ahead and switch it over here. We'll go ahead and take away. I'll take away the actual. There we go. Maybe I have to restart my. Let me just restart the camera quickly. Maybe that'll be the issue there. All right, give me a second here while I go ahead and just restart on the camera itself. Maybe that'll be the issue. While I'm busy getting that all restarted right here, you can see the camera's frozen up a little bit here. While I get that restarted up, I want to go ahead and once again just remind everyone, and let me move it over here, change the camera view. All right, let's change the camera here. All right, there we go. And let's switch it over to this camera and then back to this camera right here. There we go. All right, problem solved. All right, traders. Now, going back to what we were talking about earlier on, let's get back into what we were discussing earlier on. All right, so this is the thing. All right. So this is the deal. With regards to a Trump sort of agenda, all right, we got to remember that Trump's agenda is American first. All right, America first. Now, with American first, does it mean that Trump is looking for a stronger dollar? And the answer to that is no, it isn't. All right, because this is the reasons why. And again, I could be completely wrong, but this is my take on this. With an American first agenda, I'm going to think this, right? I'm going to think that a strong dollar is going to be a problem for exporters. Why? Because if the dollar's too strong, do you really think they're going to be able to sell goods to other countries when the dollar is that strong? They're going to be paying a lot more for those goods. So it's going to create problems for our exporters. Now, why is our exporters important? Well, because they are selling products out to other people and bringing currency back into this country. And so that's going to help with our GDP. We're always going to encourage outside currency to come into this country so we don't have to print new money. Now, if we have outside currency coming in, but the dollar's getting stronger, we're going to get less money coming into this country, which means tourism will take a toll as well. So that means companies here in the US that rely on tourism, and also states and cities that rely on tourism, that's going to become a problem too. Those businesses will suffer. That's not American First agenda, all right? So which means that we're looking at this now from a couple of angles. Firstly, number one, we've got a rate decision that's coming up next week. We've got the inflation number that just came out, 2.7%. We saw a little bit of fluctuation. The market moved down, up, down. We didn't really see it go anywhere. We've got rate decisions coming out next week, and it looks like it's about 90% chance that they're going to either cut 25 to 50 basis point. All right. So which means that when they cut an interest rate, we normally see a downside move in the currency. Now we've got in the next 10 minutes or so, we've got the Canadians also coming out with a rate decision with a 50 basis point cut. Let's see what they put on the table. If it comes out with a 50, we're going to see a market reaction. We're going to look at the technicals, because traders, one thing that we have to understand right here, all right, is that the markets are going to react around liquidity levels, all right? Now, I'm going to give you a short sort of description of what liquidity means. Liquidity is what fuels the market, right? Liquidity is what fuels the market. Now, if liquidity fuels the market, then it makes sense that if the market takes out external liquidity, it's going to go ahead and chase after the next opposite side liquidity. Because once it takes out buy side liquidity, the only option for it then to go ahead and do is move down to sell side liquidity, right? And so the market's going to constantly do this. Now we have external and we have internal. Now this is important why you need to understand what the model is, what the market maker model is set up. Is it a buy model? Is it a sell model? What does that mean, Gary? Well, that means typically what we want to look for is the market in an upward trend, which means that we're probably heading into either a distribution move, or it actually is in a manipulation move. So we have to understand trends can be in manipulation moves, and it can also be in distribution move. The biggest move, of course, the distribution move. You want to try and make sure that you get in on a distribution move, because that's where the money's at. But this is the thing that you also have to understand, right? We also have to understand is that that the distribution and manipulation has two sort of purposes, all right? Distribution, let's go to manipulation first. Manipulation is normally where a price is looking to take out liquidity before distributing into a longer upward sort of motion. Now, distribution is normally where it takes out what was generated, which means we had generated liquidity that was set up as the market was moving into a manipulation move. And then when we have distribution then takes out liquidity that was generated with that move to the downside. Okay, so traders, not to confuse anything more than that, let's go ahead and dive into the charts. We've got about less than 10 minutes to go before the markets open up with the news release. So let's go ahead and take a look right here. So firstly, number one, we just had the Dow opened up this morning, and the Dow did open up a bullish. So we had a bullish Dow. We were expecting a faded gap move, which means a continuation of a bullish move. And that's because of the trend is bullish, the momentum's bullish, and volume is up in the stock market. So we're expecting to see a faded gap move. Now, there could also be a fuller gap move initially, but then we're expecting the market continue to be bullish for the day. All right. So it doesn't matter if the market's opened up bullish and we have a little bit of a retracement. That's just a retracement, but we're expecting price to continue to move more north. Now, if the Dow is going to be bullish into today's trading, then that means in this morning's trading, we're probably heading into what we call a risk on trading environment. What is risk on trading? Risk on trading means that we're expecting to see Canadian strength and dollar weakness. Now, coming to the rate decision out this morning, that may not be what's going to play out with of course, with the data. But let's pay attention to what the markets are saying technically. Now, I want to just go ahead and let everyone know, all right? if I go ahead and take a look at my biases, and I'm going to pull it up in a minute here. Here we go. If I go ahead and pull up my biases, all right, you'll already see that still I am for this week. My bias on the US dollar CAD is actually, in fact, bullish. You can see right here on the right hand side, you can see that my direction, my bias is bullish. All right. So, which means that traders, you have to understand that I'm not oblivious to the fact that I know and understand that we're in this bullish trend still. All right. And the bias has not changed. Now, I'm going to go ahead and take a look and see what that looks like here on the chart. All right. So, on the chart right here, look at the daily. This is the weekly time frame. Okay. On the weekly time frame, you can see right here that we are holding up just above this weekly range. You can see right here, it's testing that resistance. But this weekly candle is struggling a little bit. Now, although we are in this bullish bias, if this weekly candle, now get it, that means by the end of the week, all right, so you're going to have to wait a little bit, but by the end of the week, if the market continues to stay below, and I'm going to give you a price level that you've got to pay attention to. If the market closes below 146.68, write that down, 146.68. So if the news comes out today, and we get into tomorrow's trading, and we get into Friday's trading, right? And by the end of the week, we still close out for the week. It doesn't matter what the market does above or below, but how it closes out. If it closes out below 146.62, and I'd like to see a nice close below it, but if we close out below that, then price is going to move to the bottom of the range. Now, which means, traders, again, I want to go ahead and make sure everyone's clear. We're still in a bullish bias, all right? Now, even if the market does close below 146, next week will still be bullish, but the intraday move will be different. All right, we're going to see a different intraday move, which means that we're going to be expecting the market to do something like this. Let me go ahead and see if I can pull up my writing tool here. We're going to see the market do something like this, where we're going to expect price to do, let's see if I can move this around. Right. We're going to expect price to do something like this, where it's going to create, let me just change the color here. Let's do this right here. All right, cool. We're going to expect this. We're going to expect price to hold up here, close out below. And if it closes out below, we're expecting price to start working its way back down towards this range. Now, we see a big order block sitting over here. We want to see price actually displace below that order block. And if we do displace below the order block right here, then we are going to anticipate price to continue to work its way back down to where we see now a weekly and monthly fair value gap. So we've got the weekly and the monthly fair value gap. You can see right here, this is on the weekly time frame. This is the weekly fair value gap sitting over here. There it is. Sorry, there it is. All right. So we're going to expect price to go ahead and work its way back down here, and then possibly go ahead and move back up. Now, we'll deal with this area once it gets there, but what we're looking for at the moment right now, traders, we're looking for the market to confirm that we're down, that we're going to be heading down by confirming a close below by the end of the week. Now, some of you are saying, well, Big Dog, that doesn't really matter now. What's going to go down right now? In the next minute, we're going to have the news coming out in the next minute. Now, what I'm going to do is I'm going to go to my 4-hour time frame right here. Right, here's the 4-hour. Now, this is what I'm going to be looking for. Now, you really need to have more time in the market to be able to establish direction. So even if the news comes out and there's fluctuation, it's really, you need to get a little bit more time before the market, before it confirms whether we're long or short. All right. Now, remember, traders, this is the consensus across the board. They're expecting to keep the rates unchanged. Keeping the rates down 50 basis points. So they're going to cut rates 50 basis points. That's what it is in the next 20 seconds. All right. Now, what I'll be looking for here is how the daily closes out. Right. Very important how the daily closes out right here. But in the next 4 hours, I would like to see price trading below this area right here at 1.4155. All right. So we're sitting in this range. And by the way, traders, with us sitting in this range, I'm going to expect price to want to close out below there if it's in our favor. All right. Now, there could be fluctuation like you're seeing right now. You see the market fluctuating, doing all this thing. If it doesn't close below that 141 by the end of now, and by the way, traders, this can go all the way back down here. I still need to look for a close below 141.55. All right. Remember, this is just market fluctuation. Now, let's take a look and see what the market did right here. All right. We got them actually 50 basis point. Now, I want you to understand something, that this 50 basis point could be already priced in. All right. That means that the market is just reacting to what has already been said over the last week, 2 weeks. All right. They knew there's going to be a 50 basis point cut. Everything was decided on based on inflation, based on jobs, based on, the housing market. All of that stuff is already priced in. So right now, the question is, can we maintain? Now, you think if they go ahead and cut interest rates, that you would have a weaker Canadian dollar, right? So with the market dropping back down south right here, that doesn't really uh, justify what we expected to see, right? We expected to see a rally, a spike to the upside, instead of a spike to the downside. Now, the question here is, and this is the question you have to ask yourself. That's why I've got to look for the close. I've got to get displacement below those levels. All right. This is the question that you have to ask yourself. Is this manipulation? Yeah, we have accumulation. Prices going and prices manipulating. Is this a manipulation move to take out the high or the low? Sweep liquidity here. Why? Because there's resting sell stop sitting over here. And then the market's going to go ahead and continue to move back up. All right. So could we see price sweep in the low right here around about 1490? And then the question is, can it stay below there? Because if it doesn't, then it's just a sweep of liquidity and price is going to turn around and head back to the upside. So am I excited about this move? Absolutely. All right. I'm absolutely excited about this move. But the question is this move going to stay there? That's the key right here. Now, let me go ahead and take a look at something here. All right. I want to go to the daily. Now, I want to go ahead and point out a couple of things here on the daily. Right. Number one, we have already seen some indecision here at the top. We need to see a solid displacement close at the bottom. What do I need to see the market trade? I need to see the market trade below this low at 40.92. If we can close out below that 40.92, all right, I'm going to be really happy by the end of the day today. All right. So obviously that's going to be crucial that we close below that level. Now, my biases still remain for the week to be bullish. All right. Even though the daily time frame will close, if the daily time frame closes below that 40.92, my bias for the week is still going to be bullish. But my internal structure is giving me an indication that we're moving to the bottom of the weekly range, which means that intraday, short term, we'll be looking for price to drop back all the way back down here to 139.90. Traders, that's the hope and that's the expectation I'm looking for right now. Now, as everyone has noticed, traders, we have been in a huge rally. All right, huge rally here on US dollar CAD. And believe me when I tell you this, that price is anxiously looking to reach for liquidity that was generated on this upward move. All right, if you take a look over here, we can see that as price rallied up, these lows right here is generated liquidity right here. And the market is anxiously, all right, some people are talking about 146 on the US dollar CAD. I'm not saying and disputing that 146 is not a play. I'm just saying that before we get to 146, we've got to see the market sweep liquidity, all right, that was generated on the move going up. Now, when we see this correction move, what this normally means is the market's also trying to rebalance, because there's 4 reasons why price would move. All right, there's 4 reasons why the market moves. One is that it always creates liquidity, right? So it's generating liquidity. That's the one reason why. Number 2, it's hunting for liquidity. Number 3, it's rebalancing equilibrium, all right? And then number 4, it's rebalancing insufficiency. So all of this monthly and weekly fair value gaps that you're seeing right here, this is insufficiency that price wants to rebalance. So price is actually drawn to those levels, because in those levels are order blocks, right? Or these orders sitting in those areas. And in those areas is where price wants to go ahead and rebalance. Now, traders, price also, if you want to look at intraday moves, price also goes ahead and rebalances insufficiency, like inside candles. Like if this was a candle right here, all right, and it was selling off, and the next candle opens over here, and we have another let's actually let me do this. Let's say we have a closed candle like this, all right? Then what we're going to have is this candle that opens up right here. You will always notice that this candle, the third candle, will come back and retest this area right here. We'll come back and retest it. And if it doesn't, and it might just, and by the way, this is a super awesome entry point to go ahead and want to enter, because as price goes back up here, that's a good entry point to enter as price wants to go ahead and move further down south. So traders, if you're looking to scalp the markets, and I promised you guys we'll do some bonus trades today, so stick around. We're going to do some bonus trades today. I'm going to go ahead and implement some bonus trades. And also, these bonus trades will be put into my Telegram channel. So you can go ahead and follow those trades as we go ahead and break it down. All right. Now, let's go ahead and continue. So let's go take a look right here. If price is going to rebalance, right, where is that rebalance level? Well, if you take a look from here, from that price swing to the price low or high, we're looking at the market rebalancing right at this level right here. Notice how that level, all right, that rebalance level is right at this previous low right here. And this is how you can determine where price is trying to move to. So right here is where we want to see price rebalance, right? And it also happens to be at this monthly fair value gap. So price is going to try and come back to this fair value gap right here, and then maybe tap in. But right here is where we want to see a market structure shift, and then we could start looking for some upward movement. If it doesn't and disrespects this fair value gap, we're probably heading further down south, and we're staying inside this larger range, right? Now, do we see the same thing happening here on CAD Swiss? Yes, CAD Swiss. Right, here it is. Take a look at this area right here. Now, let me take all this indicators out the way so I don't confuse you guys, but take a look at right here. On the CAD Swiss, what do we see here? Right? And this is where traders are, for those that are trading the CAD Swiss, this is the deal that you need to know. All right? We need to know this, that the market moves in AMD. Accumulation, right? Manipulation, and then distribution. Now, traders, are we in distribution now? No, we're not in distribution now. I want to remind everyone we're not in distribution. We have to wait for confirmation. Now, you can go down to low time frame, find something smaller, but if I just look here on the monthly, we're not in distribution. So if you want the larger time frames to line up with your internal move, we're not there yet. So external, internal, not lined up yet. So this is the deal. If we take a look over here, we have a high. What is that high sitting at? And why is that important? Because traders, when the market takes out this high, then that confirms our market structure shift. So where is the Canadian Swiss going to go to long term? Traders, it's going to come all the way back up here to 79.20. All right. So 0.7920. That is the long term buy. Now, hold on. Let me tell you something that you guys really need to know. We're picking up some positive swaps on CAD Swiss. So I know some of you like big dog and just want to get the heck out of Dodge. I get it. All right. But this is the thing. When the market starts coming up here and we take out this high right here, we're going to see a market structure shift, which means that we're now moving in from a manipulation move into a distribution move. And that means that we're now going to chase after the starting point of our accumulation. This is going to be what we call our draw of liquidity. Price is going to draw towards that level. We've got to wait for the confirmation of that market structure shift. Without that market structure shift, we do not have the market moving inside distribution. And so it's going to be critical for us to see that. And what is really nice is when we see these type of patterns appearing right here. When you see this pattern right here where the market creates a low and you see a little bit of a Again, I call this the liquidity sweep right here because this is a little bit of manipulation below this area. Why? Because there are resting sell stops down here below. And so the market sweeps this. And what is key, and I've mentioned that before, if we can get above this area right here, let's go ahead and check out the low. You see this low right here? It's at 62.99. Call it 6,300 because we're friends, right? So 6,300. If we close out, be it the weekly time frame, be it the daily time frame, but if we close out above 6,300, we're on our way to the next high, which is the internal liquidity at 67.20. Once we displace above 67.20, traders, we are going and we're going to be reaching for what number? 70. I've got a high right here. 78.20. I said 79.20, but it's 78.20. It's going to be reaching for 78.20. That's going to be the big move right there. So it's getting through this area right here that's going to be critical, right? Got to get through that level. If we get above there, we're chasing after this level. And then once we get above there, then traders, it is a free for all the way to 78.20 right here, right? 78.20. All right, now let's go ahead and once again just take a quick gander at our US dollar position here. This is US dollar, and you can see right here we're getting this. This is the monthly time frame. I want to point out something on the monthly time frame. Check this out, traders. All right. Notice here on the monthly on the US dollar CAD. Notice that this level right here is being respected. All right. This level's being respected right here. With this right here, if we close out at the end of the month, now again, this is the end of the month. It's going to be a great 2025. I'm telling you right now, it's going to be a great 2025. If we close out below this area, what is it telling you? It's telling you that we had accumulation, manipulation, and now we're looking for distribution back down to this area right here. So 34, call it 34.50 is going to be a target to the downside. We'll have that discussion at the end of the month. But it gives us opportunity. Traders, if you're looking for biases, it's giving you opportunity to say, hey, listen here, if we get this confirmation, there's a long-term sell-off of the US dollar CAD all the way down to 134.50. All right? That's an opportunity for other traders. Now, let's go ahead and continue. We're going to go ahead and take a look at some trading opportunities this morning. And what I'd like to do is I'd like to go ahead and dive into some short-term short-term trades. We're chasing after 20 pips. I want to introduce to you also a smart entry tool that we're going to be using to enter the trades. And also I'm going to go ahead and introduce to you a couple of things that I know that some of you traders are struggling with. And that is holding onto positions too long, swap cost, not cutting your losses, right? Adding too many positions and not cutting your losses when the reversal is in play. I've had so many times traders go, big dog, the trend's down. Why are we buying? Or the trend's up. Why are we selling? All right. And so I've got something to go ahead and show you guys that if the trend changes, we are going to switch out. And we're going to talk about that in a minute. Let's go ahead and before I go ahead and dive into that trades, I want to go ahead and just go ahead and thank our sponsors for this video. All right, traders. Well, welcome back. And yeah, thank you to ACAP for sponsoring this video. If you guys are looking for a broker, check out ACAP. Fantastic company, fantastic broker out in Australia. Great company to work with. Good spreads and all that other good stuff. Check them out. ACAP is a broker to look out for. All right, traders. Now, let's go ahead and take a look at some trading opportunities this morning. Now, I'm going to go into, let's go take a look over here. I'm going to go into, there's going to be two. Let me see here. Going to pull in, let's see here. All right. I'm going to go ahead and pull in right here, holding on to that position. All right, so I'm going to go to take a look at Aussie New Zealand dollar, and I'm going to go ahead and take a look at pound US dollar here as well. So Aussie New Zealand dollar, and then pound US dollar. These are the two positions we're going to look at. So let's go to pound US dollar because we've just had some CPI numbers coming out today. Let's take a look at pound US dollar. Now, first, I'm going to go ahead and let everyone know what is my bias for the week on the pound US dollar. Well, if I take a look over here, my bias for the week, and it doesn't necessarily mean we're going to change, but look at the bias. The bias is bearish. All right, we've got a bearish bias. Doesn't mean I'm going to sell. All right, I might change my intraday setup. So let's go here and take a look. So if I look at the pound US dollar here on the weekly time frame, all right, let's see if I've put in some biases here. All right, got a couple of things loaded up here. All right, so here is my notice over here. You see this daily equilibrium level right here. All right, prices come back into this right here. We've had a balance of equilibrium in this area right here. Let me go ahead and mark that off. Equilibrium. All right, so we had a balance of daily equilibrium here. We also noticed that this daily candle did close out above here. So, this weekly candle closed out above this previous high. All right, this candle showing indecision. And so when I look at this setup right here, I noticed that my weekly did close out above. Now, it didn't close out. I'd like to have seen it close out around about 20% of that previous high. It didn't do that. It closed out probably around about 10% above that previous high. So it's still indicating that we've got this bias, but I'm going to pay attention to this right here. And I'm going to say that I'm not completely convinced that we're still in the bearish bias, and I believe that we should be looking for a bull move. Now, if I look at this candle, if I'm going to trade, this candle right here is going to be my sort of the candle range that I want to pay attention to. If I notice that the weekly last week we did close out with indecision last week. So is it possible? All right, is it possible that the market could do something like this? That we could sit inside this range, and the market could just test this area and then take off and start continuing to move north as it starts targeting this daily fair value gap? The answer to that is yes, it can. So because of that, I'm going to go down to my 4-hour. Oh, actually, my daily. I'm going to look what my daily bias is here. So remember we spoke about change of market structure? Well, here on my 4-hour time frame, I noticed that we did have the market doing something like this. It started coming down. It came out of this range. It headed south. We created a little low. Price came back above here. All right. And so what did we see here? We saw a market structure shift. All right. That means that we should be on the buy side of the curve. Buy side of the curve just means that we're going to see a continuation of a rally towards the top of the range. So we're looking at 130.50 to be our external draw of liquidity here on the pound US dollar. Right. Now, traders, because of that, all right, because of that, we're going to expect, all right, we're going to expect the market to continue to work its way up here. Now, we can see right now that the market is sitting inside this range, right? You can see very clearly there that we're not moving anywhere at this point in time. So I'm going to go ahead and dig deeper into the lower time frame. So I'm going to go ahead and pay attention to this. You see this candle high? This candle broke above that high, so we got a nice bullish range here. But notice that we also got this candle here that is holding, all right, is holding resistance. We got a wicks on the top right here, but it's not fading. But traders, the question here is not whether it's not breaking through, but what is the bias? Our bias on the daily is bullish. So because our bias on the daily is bullish, what we really want to do is pay attention to the lower time frame and see if we've got any signs of a possible upward move. So this is what I'm going to do. I'm going to go ahead and move down to the 1 hour. Oh, check this out. All right, so here's the 1 hour. Now, clearly, traders, if you look at the 1 hour time frame, what do you see here on the 1 hour? All right. What do we see? We see price hitting in a range. Right. So always when the market's inside accumulation, all right, try to stay out of those type of trades. All right. When the market's in accumulation, try to stay out of those trades. All right. And the reason why you want to stay out of those trades is because you might get caught up in this whippy lashy type of move. But I'm going to place a trade because this is the way I'm seeing the market. I've already looked at my weekly. I understand what's going on weekly. I've got a bias on the daily. My bias is bullish on the daily. And so what I'm going to do is I'm going to look for the market to show some sort of market structure shift, even though it's inside this range. And you see this high? We had a good displacement above that. Guess what, traders? We got an order block sitting right here. This order block is going to hold the market and it's going to push it back up to take out liquidity. Here is our first liquidity high. We got a second liquidity high up here at the top. So we got first one right here, second one right here. So intraday, we should be bullish. Now I'm going to take a look and see what the target is. So if I enter here, my first target is going to be 30 pips. Traders, this is a no-brainer. So guess what I'm going to do? I'm going to trade this, and I'm going to go long on the pound US dollar right here. Let's go ahead and enter. Pound US dollar, enter along, looking for the market. And take a look right here. You see where my target's sitting at right now? Right here, where we're expecting price to go ahead and grab that liquidity. So we're looking for price to sweep up here and to grab that liquidity. Now, traders, if you check out my description down below inside the video, you'll see that there is a Telegram channel called the FX Big Dog Trading Channel. In that channel, we've gone ahead and placed trade. The trade has been placed right here, and it's showing right here as a bonus trade. For those that follow me, you probably noticed that it's there. It says there, buy US dollar at 127.54. Now, traders, you don't have to do that. I'm just telling you that it's everything I'm doing is open and transparent. It's there in the app. All right. Now, let's go ahead and take a look at the next trade. Next trade I want to look at is the Aussie New Zealand dollar. What's happening with the Aussie New Zealand dollar? Well, let's go ahead and take a look over here at the Aussie US dollar. Now, Aussie US dollar, what is it doing here? The Aussie US dollar is setting up, and wait, let me first go to the weekly. All right, so here's the weekly. All right, and so I'm gonna do some housekeeping here. Let's remove all these things. Do some housekeeping here. So what do we see here on the weekly time frame? All right. So firstly, number one, traders, you have to realize that when market takes out liquidity, it hunts for the opposite side, right? So if we look over here, what do we see? We see highs up here at the top. We see lows down here at the bottom, right? These are liquidity levels. We've seen that the buy side liquidity has been hit right here. We've got another liquidity level right here that's been tested. So we've got equal highs over here at the top, right? Market's adjusting. Take a look what we've had here. What is the market doing here? The market has gone ahead and looking like it's sweeping below. This is the weekly, or at least testing this area. So we got to pay attention to this area right here, because according to this weekly, we should be heading further down south. There's generated liquidity that the market's going to go ahead and sweep. And then it's going to look for this external draw right here. This is going to be the external draw of liquidity down here. Now, this is larger time frame. Let's break this down into a smaller time frame. Let's go to the daily. Here's the daily. Now, traders, again, remember, all right, the market is doing what? AMD. What is AMD? Accumulation, manipulates. Where did it manipulate to? A previous high. All right, it had to sweep that previous high. It had to. They are resting buy stop losses right here. So we've got buy side sitting over here. So the market goes and accumulates, it manipulates, takes out liquidity, which it needs in order to refuel, and now it's moving into distribution. Right. So now we say, now we've understand the model we're in. What model are we trading? We are trading a sell model. That means, traders, that we've got to think bearish, right? Now, that doesn't mean that intraday we might have a slight bullish move in the intraday. Because why? Because the market could do this, right? And then sell off. So we could see this intraday move right here as price looks for internal liquidity before the market heads back into distribution. So we can certainly have that setting up too. So we've got to be aware of that. Now, let's go ahead and break this down on the 4-hour. So here's the 4-hour. So you're going to look at this and say, okay, if this is the 4-hour, this is going to be my AB swing going down from here to here. I'm going to mark that off, and I'm going to mark that off as a Fibonacci level. So I'm going to go ahead and move that up, and let's go change it to my fibs. There we go. All right, so there we go. Fibonacci level down here. Now, price is stalled here at the 127, which means, traders, that this area becomes significant right there. Why does it become significant? Because, traders, that's going to tell us that if price fails to stay below here, then price is trying to work its way up to take out liquidity here. And also, what does price do? It rebalances insufficiency, right? It rebalances equilibrium. So traders, this price action move, let's go ahead and look for the equilibrium level. Where's the equilibrium on this? Here it is. Equilibrium is sitting right here at this area. I'm going to mark it off, and I'm going to go ahead and label it. And it's going to be labeled as my hourly equilibrium right here. There we go. Oh, this is actually 4 hours, so my bad. Let me just change it to 4 hour. So this is H4 equilibrium right there. All right, now we got it. So let's now go ahead and move this back here. So this is where I can see price moving to equilibrium. Now, what is all here? Take a look over here. Do you see this big gap right here? Price has got insufficiency here. Wow, are you kidding me? So we've got a 4-hour order block sitting over here. There's a 4-hour order block sitting over here, right? Sorry, not order block, a fair value gap, right? Now look just above. If you can't see it, let me go ahead and take my drawings out of the way. What do you see here in this area? What is that? What is this? All right, that green candle is an order block sitting over there. So we've got a 4-hour order block sitting there as well. So can you see how the market would want to come back, tap into this area before heading back down south? Now, traders, we've already established that the market is bearish, but this is an intraday move that price will move up before it comes back down. So I'm expecting price to move back up. So I look at this and I go, and by the way, traders, I mentioned to you I was going to show you a couple of things here. I was going to show you the new smart entry AI that's going to cut your positions if you're done. If you're done and you decide that, hey, listen, I want to trade the bias, but if the market changes direction, I'm going to cut my losses and I'm going to go ahead and readjust. I'm going to show you how that looks like in a minute. Okay. In fact, traders, before I get into this, let me go ahead and show you something here. All right. Let me go ahead and show you something right here before we get into it. And what I'm going to do here is, traders, I'm going to show you one simple thing. All right. And it's all going to be based on biases. So let me go ahead and set it up right here. I'm going to show you how this all works. Everything I'm showing you right now, I'm going to go ahead and give you a good demonstration right now of what that looks like. So give me a second here while I just go ahead and set this up. And I'm going to show you exactly what this looks like. You're going to be absolutely amazed. All right, so let's look here. Load. Just double check. Load. Yep, got it there. All right, and here we go. All right, so here we go. I want to pull it over here. Hang on, let me just switch this out. Yeah. I've got to make this larger so everyone can see it better. There we go. All right, here we go, traders. Check this out. All right, so here we go. All right, so remember we spoke about biases, right? So what we're going to do here is very simple. We're going to, in a bullish bias, we want to buy, right? So when we look at this right here, I'm going to speed it up a little bit right here. I'm going to just speed it up a little bit so you can see. And let me go ahead and compress the chart so you can see what it looks like. So in a bullish bias, we're going to buy, right? In a bullish bias, we're going to buy. Now, the market, if it goes against us and it goes too far against us, what are we going to do? We're going to cut our losses, right? We're going to take losses. But if it stays inside that bullish bias, then we're going to go ahead and continue to be bullish on their trade. So it doesn't matter what the markets do. As long as the bias remains bullish, we're going to go ahead and stay in that trade. All right. Hold on a second here. And let me change this. Let's speed this up a little bit. Let me speed this up a little bit so you can see it. Speed it up. All right, here we go. So it's going to go a lot faster now. All right. So bullish bias, we only buy. All right. Bearish bias, we sell. And so we're going to constantly just get in and out of trades. We're going to be buying in the bullish market. If the market goes bearish, and by the way, traders, you'll notice that the trend changes. All we're doing is buying because the bias is bullish. All we're going to do is buy. All we're going to do is buy. The bias remains bullish. We're just going to buy. Doesn't matter if the market comes down a little bit. We still, remember, we're trading on a 30-minute time frame. If the bias is bullish, we buy. If the bias changes, we're going to change. All right, take a look right here. We stayed bullish. We stayed committed to that because the bias was still bullish. Until we get a change of the bias, we're going to say, all right, now the bias is bearish. So we've got some buys in right here. We either get out of this trade or we liquidate a position, take our losses. So let's go see. All right, we end up making profit, although the bias changed. And now we're just selling. There we took a whole bunch of sells. We're just selling. Now this means, traders, that even if the market is, oh, by the way, look here. Notice that the bias is bullish. We picked up some sells. We stopped trading because the bias changed. We were bearish. Bias is bullish. We stopped trading. Now we just hold on. We say we're holding on, but we're not going to add new positions. And if the bias continues to stay this way, we're going to cut our losses. Let's see if we cut our losses. All right, we cut our losses. What does it look like in our, look here. There it is. So we got this nice little rally right here. We cut our losses. That's okay. We restart, right? We continue. Continue. Now, again, take a look over here. I'm going to speed this up a little bit faster. I'm going to show you what this looks like here. So we're going to continue to do this all the time. And you'll see right here. So we start recovering. So we got this little, we decided to cut our losses. We get a restart again. We're still making profit. So now let me go ahead and run this really fast for you, right? Let me show you. You've seen how it works in real time. Let me go ahead and show you how it works now without the visuals. And I'm going to look at the charts. Just look at the graph right here. Take a look here. This is what it looks like right here. And so, yes, you get these little dips, and you get these little dips, and you get these little dips, and you get these little dips. And there where we cut the positions. That's where we cut the positions right here. But then you go ahead and say, all right, we've taken a loss. We're going to continue to trade because you know why? Because we know that 1 or 2 times a year, we might get these blowouts that we have to cut our losses. But if we cut our losses and we continue, we're going to be able to capture more profits, and we'll be able to get past the previous high and continue to see profits grow and grow and grow and grow. All right. And so we continue. Now, this was based off a $10,000 trading account. We're already at $20,000 right here. So which means we're growing, and we're growing. We're placing trades and we're growing. And we will take losses if the market moves against us. So remember, traders. So coming back to this right here, right? Coming back to this. Let me go over here. And let me move back to this. Looking at the Aussie New Zealand dollar right here. What was my bias I said on this? My bias on this for the week is, let's go here. My bias for the week is actually bearish. Right? So this is the option we have, right? We can look at this and go, okay, if my bias from here to here, all right, I'm going to mark this off, and I'm going to mark that off as, if this is my weekly bias here, all right, I'm going to put up my weekly range, and I'm going to put it down here, and I'm going to look for this right here, down here, and I'm going to call that my weekly range low, and drop that down to the bottom. All right. Now, the reason why I put that in right here All right. Oh, hang on. Actually, my bad. I just realized that that is not my weekly range. It is slightly lower. All right, there it is there. All right. So if this is my weekly range, right? And I'll go down now to the 4-hour time frame. And I look at this and I say, okay, this is where I should be trading. So if my weekly range is bearish, and I'm going to go ahead and relabel this. Let's do it. Let's go ahead and relabel this. And we're going to label this now. Let me move back here. Let's just do that so I can get to those labels. And I'm going to go over here and I'm going to mark this off as, I'm going to mark that off as bearish. All right. So my weekly range is bearish, right? Now let's go back to the 4-hour. Now in the 4-hour right here, this is my choice. I've already said that there's a possibility, all right? There's a possibility that we could see the market moving up here, take out the high, come all the way up to this fair value gap sitting over here, and then work its way back down south. Also go to this equilibrium right here. Now, if I want to stay with the bias, and we've heard that before, traders like, "Oh, big dog, I want to stay with the trend." I get that. All right. If you want to stay with the bias, stay with the trend, this is what you're going to go ahead and do. All right. You can go ahead, and we got a question here. Says, can I place my automated bots trend setter for trade? Yes, absolutely you can. You can do whatever you want. So if the market does this, right? If the market is going to come up to this area, then what I could do is like say, hey, listen here, I want to stay bearish with the Aussie New Zealand dollar. And so there's a couple of things I can do. I can say, I'm going to sell here, right? I'm going to sell here. And if the market goes up higher, I'm going to re-enter. But I know that by the time the market gets here, I'm going to have multiple positions in, right? Now, if I've got multiple positions in and the market has just gone ahead and corrected itself here, as it's taken out this liquidity and rebalanced, as well as rebalanced insufficiency and equilibrium, then I've got 4 positions holding over here. What I can then do is say, I'm going to chase after some deeper profits to the downside, which means, traders, this means we're looking at this now and from a bigger perspective and saying, hey, here is my swing. I do expect price to go to the 1.618. So which means if I cost average into this position, and I'm now at, let's say, 1, 2, 3, 4. Let's say my break-even point is right here. This is my break-even. Now my target is going to be this area right here, right? And I can chase off. Now, that is now where we're going to take profit. But if the market bias, if the weekly bias switches, and the weekly bias goes from being bearish to actually confirm bullish, then what I'm going to do is I'm going to liquidate my position, because if the market does this, and the bias changes to being bullish, there's a high probability that we're chasing after liquidity high back up at this area right here. And that's going to be at 1.1106. All right. Sorry, 1.11806. All right. So it's actually 11.80. That's the target to the upside. All right. So what you do is you liquidate your positions and you'll be able to get in. Now, traders, if you're asking about if you're asking these couple of questions on that about smart entry AI, what does that mean? This is something that we're going to be launching over the next week. Over the next week, it's coming out. This is next week's coming out. And not only that, not only is it going to be launching with this option here with the biases, but it is also going to have the trades that I go ahead and send out. It's going to have an actual dashboard here that's going to tell you, hey, Big Dog says there's that he's bearish on or bullish on this particular pair. So let's say he's bullish, right? So that means if I'm bullish, it'll give you the break-even point, the direction, the break-even point, and how many trades I have in that order. So which means you can go ahead and say, hey, I want to actually trade this manually. And if I want to trade this manually, that means that I'm going to go ahead and set my biases onto something like this, where I'm not going to go automatic. I'm going to go ahead and set this manually. And if I set this manually, I'm going to have the option to sell or buy based on what I believe is right. And then if you decide to go ahead and say, hey, I'm going to buy, as an example here, if I decide that, hey, I'm going to go ahead and buy, but the bias is bearish, what it's going to do here is going to go ahead and click here. You can say, do you want to open a buy option? Yes. Now, you notice that it didn't put a trade in because it's telling us, hey, the bias is bearish. You're trading against. So unless the bias changes, only then will it enter the trade. So you can put some restrictions as well and say, hey, if I trade against the bias, then don't enter my trade until the bias changes. So even though the signal comes down and says, hey, let's go bullish, you're saying, I'm not going to go bullish until my bias changes. And that way, you'll be able to get in that. Now, I can go ahead and reset it right here, and I go ahead and set it back to auto as well. So now I can go ahead and say, you know what, I'm going to continue to trade auto on this and follow the bias. It's up to you. But those are the things that are coming down the line. All right, now traders, let's go ahead and revisit the market's movement today. Let's go ahead and close off today and revisit what's going on right now. Oh, by the way, traders, I said I was going to enter trade here on the Aussie New Zealand dollar. I didn't do that, so let me go ahead and do this. So traders, I'm going to stick with the bias on this. The bias is bearish. So I'm going to stick with the bias, even though the market can go ahead and move up here. And the reason why, traders, I want to just let you know, the reason why I tell you that the market may go up to this area right here is because I want you to understand when price does go there, right? Why it's going there. But it's not to say that I'm going to stick with the short-term move. I'm going to stick with the long-term move and look for some deeper targets to the downside. So which means that I'm going to go ahead and sell. So I'm going to go to my account right here, Aussie New Zealand dollar, and I'm going to sell right here on Aussie New Zealand dollar. Now, by the way, traders, you would be getting a signal popping up on your screen and telling you there it is. All right. Now, Linda, good day, Linda. Linda's asking about the euro pound. I will do my last bit of analysis on the euro pound this morning, but I want to go to the let's go to the this is a good so far. It looks pretty solid right now. It looks like we might get that close below the 141.50. Price dropped all the way down here to 141.19. So that's great. Let's see if the euros moved a little bit this morning. And the euro has not moved as much as we would hope for based on the CPI numbers coming out. So it looks like the euro might only start moving once we start getting some rate cuts in the next week with the US. So we didn't get any movement out of the euro US dollar right here. So that's something we pay attention to. And finally, traders, for those that are interested in the euro pound here, what's going on with the euro pound? Well, let's go ahead and dive in and take a look. So first thing, number one, I'm going to go to my weekly. Always go to the weekly, get some directional buys. Traders, what do you see here on the weekly? You see price at support, price at resistance. All right. You see a falling wedge. Now, don't get fooled on this falling wedge. Don't get bored up in these retail patterns, right? These are retail patterns and sometimes these retail patterns can get you caught up in manipulation. So just be careful about that. All right. But yeah, we have accumulation, right? The market's accumulating. All right. Now what I'm going to do is I'm going to look at this short-term movement right here. All right. If I'm expecting price to go up to the top here because we're inside accumulation, then what are we going to be looking for? Traders, if we're at support here, I should be looking for a buy opportunity, right? I should be looking to buy. Now, if that's the case, then let me start moving this down to my lower time frame. Let's go take a look at the bias on the daily first. What's my bias on the daily? Oh, sorry, this is too much. All right, so what is my bias here on the daily? All right, now this is important right here, traders. We got an order block sitting over here. Very important. Why is that important? Because if price moves back up here, it goes above the order block, that is setting up our market structure shift that we need to see in order for price to go to that liquidity high up there and a lot higher up there. So at the moment right now, what is my bias? So this could be just accumulation right here. Market's moving into manipulation. And if it's moving into manipulation, then look to the left-hand side to see where it's going to. Let's find out why the market's going to that area. All right. And so let's go ahead and do this. Let's do this. Let's compress a little bit more. Oh, take a look here. All right, traders. Can you understand why price is moving? Price is moving because here is sell side liquidity right here. So traders, we could continue to see euro US dollar, euro pound working its way down to what is going to be our draw of liquidity on this move. So this is going to be sell side right here, external sell side right here. That price is going to look to draw to. Now, if I go deeper into this and I go ahead and expand a little bit, that means that we could see price, and I'm not oblivious to the fact that we've taken out this buy side right here, all right? So, sorry, sell side. So we've taken out some sell side right here, right? Sell side has been taken out, which is fine, but we got to sweep this liquidity low right here first. Traders, we've got about another 25 pips to go, all right? Another 25 pips to go. Now, let's say I'm wrong, and let's say price turns around. What is it going to need to do? It's going to need to take out the high right here. That's the high right here, because yeah, you can see we have accumulation. Price has gone ahead and manipulated, but it's still going to chase after that liquidity. Once it gets out, it gets to this liquidity area right here, then it's going to start working its way back up. Now, this is the high we see right now. But traders, don't get caught up in this as well, all right? Because what's going to happen here is when the market goes down, there's a good chance that when we get down to this level, the price is going to look like it's going to go to rally. And then it's going to end up dipping down south right here, sweeping the low, and then going up. And then you can look for this market structure shift. So wait for the manipulation, wait for the market structure shift, and then you go ahead and execute a trade. Now, if you're already in, and I'm already in on this trade, I'm going to show you my trade. If you are already in on this trade and you got multiple positions in on this, we're holding 5 positions right now. I might pick up a 6 or 7 position on that. All right. What is the bias on the euro pound on the weekly time frame? All right. Let's go to the weekly right here. Now, the entering the market, I did not enter the market based on looking to cut my positions. But this is what I'm going to look at right here. By the end of the week, we want to see price back above this high right here. Let me see here. Hold on. Let me just look at my bias first. So we went bearish here, and then that low was taken out. That high was tested there, but this low was eventually taken out with this one right here. So we got a bearish bias there. Okay, there it is. Okay, so there's our bearish bias. So we're actually bearish. So the bias is actually bearish at the moment right now. So we're trading against the bearish bias. So this is the thing we need to look for right here. And this is, even though we're going to be bearish, right? This low right here is what we want to see price above. And this is going to be my weekly low range. So I'm going to mark that off. And this is going to be bearish. So mark it off. Right. So there's my weekly bias. I'd like to see the market trade back above this area. So not even that area there. It really needs to get above this area right here. So this weekly candle, if it doesn't close out bullish for this week, then that means, traders, that we might see this in next week, which means that if you look at the weekly candles, right, we're going to get that sweep of liquidity, right? We're going to get the market to go ahead and sweep this liquidity right here. And then maybe the following week, we might get a candle like this, and then the rally starts. So even with this candle closing, we probably want to see the market sweep this liquidity, then turn around and move into the buy side. So we might see some further bearish movement in the euro pound. And if I double check here on my biases, let's take a look here on my biases just to confirm. And there you see euro pound, we do have a weekly bearish bias. So if you're trading with the bias, you would be bearish. If you're in on a buy already, you're waiting for the bearish bias to switch. And the only way it's going to switch is when the market takes out liquidity. So we've got to take out this liquidity here before price starts turning around. All right. All right. And yes, so there was a question from someone. Saying, "Are we going to apply this to the pip grabber?" The answer to that is, it's coming. Right? It's coming, traders. It is coming. It is coming. It is coming. I'm not going to give you all the information, but look out. Make sure that you are connected to my social media. Make sure you're connected to my Telegram channel. Make sure that you've subscribed to the YouTube channel. All right, subscribe to the YouTube channel. Make sure that you're doing all of the stuff, traders, because let me tell you this much. All right, trading is not an easy business. All right, you probably figured that out already. All right, but who are the people that will survive in trading? Is when you are persistent. You're smarter, but you're persistent. All right. When the market beats you down, what do? You get back up. You learn by your lesson, and you improve it, and you move forward. The reason why I've been trading for close to 30 years now and still trading, not because I was beat down, all right, not because there was a red carpet and I just walked and that everything was smooth and easy, all right, it's because when I got beat down, I got back up again, improved my process, and then got back again. Because traders, the one thing we have to understand is that this is a battle between the bulls and the bears. And sometimes the smart money is what controls the market. And if we don't understand where the smart money is going, then what's going to end up happening is, not just on where the smart money is going, but if we don't understand that smart money is always going to change the trading environment. So when we trade a certain trading environment and it works for that period, we've got to constantly be watching and be prepared to make some alterations, some changes, so that we can get back onto that horse and ride it off again into the sunset. So traders, if you got beat down, if the market's beating you down, don't give up. Right? Don't give up, because I promise you, 30 years ago, I sold my business. I sold my business that I had for 5 years. I built up. I had a brokerage business. I was a financial advisor. I sold that business. I got into full-time trading. I took all the money that I had and put the 5 years of all the money I had into the brokerage firm. Into the trading platform. And within 3 weeks, guess what happened? I blew up everything. I lost 85% of my capital, right? 85%. To a point that I just simply took that money that I had left. I lost my cars. They repossessed my cars. My house was going. I had to move from a nice home into a two-bedroom apartment that I'm telling you right now, my bed couldn't even fit in the bedroom. I moved into a two-bedroom apartment. I was beat down. I didn't know where to go, but you know what I did? I stayed persistent because I knew that there is an opportunity here. All right. I just got to be smarter at it, get better at what I'm doing, manage my risk better. All right. And if I can do that and I can improve my process, I will be back again and I'll be doing. And it was less than a year that I got back on my feet, moved into a new home a year after that, got the cars, got the boat, got everything else. Because why? Because I wasn't willing to give up. I wasn't willing to quit. I wasn't willing to go ahead and throw in the towel and blame everyone else for my problems. I was there to fight it through another day. Because why? Because I know the reason why people trade, the reason why this market is available to everyone, the reason why people are involved in this market is because the opportunity is there. You've just got to embrace it. And traders, embrace hard times, because hard times, it makes you better. It does good for you rather than bad for you. Traders, listen here. Thank you for your time. I appreciate you guys. I really care about you guys. I really want you guys to succeed in everything that you do, especially if I'm part of it. If you guys follow me, whether you with me or on the sidelines, whatever it is, if you guys are part of what I'm doing, I want you to succeed. I want this to be the message. I want you to succeed, and I will do everything I possibly can to help you have the right education, the right knowledge, the right understanding, but also the right tools to be able to be successful in this market. There's ample opportunity here, traders, and let's embrace it. So, with that being said, traders, love you guys. See you guys in the next live show, which will probably be on Friday at the showdown against Cameron. So, with FX Big Dog, wishing you peace, joy, and successful trading. Until next time, traders, I'll see you there.